Facts Explained. If you are here for the first time, please consider subscribing to this channel. Also, hit the notification bell so that whenever I upload a new video, you're notified. In this video, we'll be talking about the SGR extension from Naivasha or Suswa to Malaba through Kisumu. It's now official that Kenya will be extending the railway from where it stopped in Suswa up to Malaba, which is a border town with Uganda. It's also official that this project will be financed through a multi-way funding model, which is between China and Kenya government. Kenya has made significant steps towards improving its infrastructure by agreeing to a multi-way funding model to extend the SGR from Naivasha to Malaba. This project is pivotal for improving regional trade, boosting connectivity, and reducing transport across East Africa. Here is what you need to know. What is SGR extension to Malaba? SGR is a modern high-speed railway system being built to improve Kenya's internal transport network. The extension of the SGR from Naivasha or Suswa to Malaba will connect Kenya central region to the border with Uganda. Malaba is an important border point that handles a significant volume of trade between Kenya and Uganda, and this extension is expected to improve the efficiency of transporting goods across the region. This particular extension is part of Kenya broader goal to make transport system a more efficient and cost-effective option, helping reduce the reliance on road transport, which can be costly and slow. The extension will also facilitate easier movement of goods to the neighboring countries like Uganda, Rwanda, South Sudan, Democratic or DRC, and Burundi. The funding model that has been preferred for this section, the total cost of SGR extension is around $5.3 billion, which covers the construction of the 475-kilometer stretch of railway from Suswa to Malaba. To finance this huge undertaking, Kenya has opted for a multi-way funding model, essentially pooling resources from different sources to make it happen. There will be 30% from Kenyan government. Kenya has committed financing 30% of the total cost of the SGR extension, which comes to the around $1.59 billion. This amount will largely be raised through railway development levy. This levy is a tax by various stakeholders, including businesses in Kenya, which is set aside specifically to fund railway projects. In addition, Kenya has considered the option of securitization, which essentially means that the government can raise funds by selling bonds or financial instruments backed by the future revenue of the railway. This is a way of attracting more capital upfront so that the government does not have to use all its reserves at once. However, the government of Kenya's ability to raise its share of funding is a complicated undertaking because of existing debt burden. Kenya public debt has been rising over the past few years, and there has been concerns about countries' capacity to take more loans or more financial obligation. As of recent data, Kenya public debt is estimated to be 13 trillion, and something this debt comes as a large portion, and it consumes a lot of money which is allocated for the budget. This raises important question about Kenya's capacity to raise necessary funds for its 30% share without further worsening its debt situation. The government is exploring a variety of financing options to meet this target, including potential domestic borrowing and external credit lines. However, these options come with the risk of increasing the overall debt burden. The next portion will come from China, which is 40%, and this is coming from a Chinese consortium. A Chinese consortium of companies has committed to providing 40% of the total project cost, which amounts to about $2.12 billion. These companies or these corporations will not only help finance the construction of the railway, but they will also operate for a period likely to be about 25 years. During this period, the Chinese companies will recoup the investment by charging a toll fee for use of railway. This means that the companies will earn back their money through the tolls paid by people and businesses that use the railways to transport goods. In exchange for this, Kenya retains ownership of the infrastructure, that is the railway itself, meaning that for the 25 years, the railway will belong to Kenya and can be operated freely by the government. Then there is another element which is coming from loan, 30%, which will come from China Exim Bank. The remaining 30%, which is about 1.59 billion US dollars, will come from loans provided by the Export-Import Bank of China, China's Exim Bank. These loans are set up with a grace period that allows Kenya to start repaying them only after 2029. The grace period is crucial because it gives Kenya time to see the returns from the railway project before being required to make any significant repayments. This is an example of concessional financing, which typically has lower interest rates and longer prepayment periods compared to standard commercial loans. It makes the overall financial burden on Kenya more manageable. However, there is an ongoing debate about the long-term sustainability of Kenya's borrowing strategy. Critics have pointed out that with rising debt levels, relying on external loans, even at concessional rates, could further strain the country's fiscal capacity, especially given that Kenya is already struggling to meet its debt obligations. Why is this funding model, the multi-way funding model, important? The SGR extension to Malaba is a key project for Kenya, but the funding model itself is also important for several reasons. One is that it is a shared financial responsibility. Through splitting the financial responsibility between the Kenyan government, a consortium of Chinese companies, as well as Chinese bank, this burden is spread out. This allows Kenya to move forward with critical infrastructure projects without putting all the strain on public finances. Second is a private-public collaboration. This model represents a successful example of public-private collaboration, where the government works alongside international partners, and this collaboration helps leverage the strength and resources of both public and private sectors. It is also reducing dependency on road transport. The SGR extension will reduce reliance on road transport, which is prone to delays, traffic congestions, as well as higher cost. With a faster and more efficient railway system, the cost of transporting goods will likely decrease, benefiting businesses as well as the economy in general. It is also allowing regional integration. The extension is part of Kenya's broader effort to boost trade within East Africa. With the railway connecting to Uganda and other countries, it will be easier for goods to move between these countries, helping promote regional trade. This has the potential to increase the economic capacity or economic activities as well as strengthen ties among East African nations. Let's now talk about the operation model. What happens after the project is completed? After the SGR extension is completed, the Chinese consortium will be responsible for operating railway for a period of 25 years. This includes managing the railway day-to-day operations, ensuring its maintenance, and also overseeing ticketing and tolling systems. During this period, Kenya will continue to own the infrastructure, but Chinese consortium will be the key player in making sure that it runs smoothly. This consortium will charge toll fees, which will help them recover their investment. Once the 25 period is over, Kenya can take full control of the railway and operate it as they see fit. What is the strategic importance of this SGR extension? The extension of the SGR to Malaba is of great strategic importance for Kenya and the entire East African region. Here is why. One, there is improved trade connectivity, where this railway will provide faster, more efficient, and more cost-effective way of moving goods between Kenya and other East African countries. The reduced cost of transport will make it easier for business to trade, boost the overall economy, and other benefits that will be derived out of that. It is also, as we have seen, is a way of strengthening regional integration, where the railway is a key part of Kenya's effort to integrate more closely with its neighbors, facilitating smooth cross-border trade. This could increase the investment opportunities as well as boost for greater collaboration among East African countries. It is also a way of boosting local economy, where this extension will have a positive impact on local economies in areas where it will pass through or area where it is serving. With improved infrastructure, business will find it easier to transport goods, and communities will benefit from job opportunities during the construction as well as during the railway operation. In conclusion, we can say that Kenya's decision to use a multi-way funding model for the SGR extension to Malaba reflects a sophisticated approach to finance large-scale infrastructure projects. By combining contributions from the government, international investors, as well as concessional loans, Kenya can undertake this transformative project without overburdening its financing. However, the growing debt burden presents a significant challenge for the country. While the multi-source financing model helps in alleviating some of these problems, Kenya will still need to navigate the complexity of managing debt and raising its share of funding without compromising fiscal stability. The success of this project will not only improve Kenya's transport system, but also play a pivotal role in enhancing regional trade, fostering economic integration, as well as improving connectivity across the East African region. With a clear operation model in place, the long-term strategic benefits of the SGR extension could serve as a model for future infrastructure projects in the region as well as in beyond. So thank you for reaching this far. If this is your first time here, please consider subscribing to this channel. Also hit the notification bell so that whenever you upload a new video, you are notified. Also, you can leave a comment, like, share, and let's meet in the next one. Thank you.